Hello and welcome to the GetRealWealth.com Deal Spotlight, where we showcase one of the syndicators that is putting deals together for the Real Wealth Academy members. Today I'm proud to introduce you to Thanga of LM Max Realty and multiple companies. His experience is expansive, so let's look at this and let me read through this for you so you understand the credibility behind this syndicator. He got started in real estate about 2008, so about 12 years of experience buying, selling, and investing in single-family homes and multifamily apartment complexes primarily. He has experience in property management and asset management for multifamily deals. He's sponsored and syndicated about 600 multifamily units so far. He's a broker, realtor, owner of LM Max Realty, a Texas state licensed real estate brokerage and investment consulting company. He's the CEO and managing partner of LiveNJoy Residential LLC, a multifamily management company who's managing 3,900 units. That is huge. He's worked in corporate America as a software project manager for about 18 years. He's a certified project management professional, and this is the one that gets me excited. Not only is he a certified project management professional, he's also an IT service management. One thing that people need to know is during COVID, people were leasing, say, 170 units. 140 of those were done offline. Never even came to the property. So IT understanding is imperative in today's market. He worked at Accenture, a Big Five management and strategy consulting company, now doing full-time real estate and enjoying financial freedom. He is kind enough to mention me as being a good mentor, so I really appreciate him doing that. His unique experience is as follows. Many multifamily deal sponsors have experience only in asset management and do not have experience in property management and IT software project management. The unique combination of these three, asset, property management, and IT experience, help him to provide the best solutions to multifamily investment, which increases income, controls expenses, automation, efficient tracking of accounts payable and receivable. Recently, in one of his assets called Villa Encanto, he increased the cash flow by 5 to 9% within just 3 months. That's unheard of. It usually takes 6, 12, 18 months to pull something like that off. He returned a 24% annual income to his passive investors. Phenomenal. That's higher than people are getting even in single family, which doesn't have the bumps that the multifamily has. So with that said, I'd like to introduce you to Thanga. Thanga, thank you so much for coming.
Thank you, Steve. Thank you very much for introducing me. And my name is Thanga, and as Steve mentioned, I'm in this real estate business for last 12 years. I started buying single family from 2009. I met Steve in other investment club, and Steve Davis is one of my initial mentor who gave a lot of confidence during his radio show and the in-person meet, all those things. He helps a lot. And I want to just start a story, why I picked a real estate. That is critical. What is the driver for this real estate investments? And as you all know, there are multiple types of investments in this world, like stocks, bonds, 401k, gold, etc. we can choose. But I picked the real estate, to solve only one problem. 10, 12 years back when I started, that time I was just had one business problem. That business problem is, how can I make some passive income with minimal risk and build wealth and enjoy the financial freedom? So why I need why I need the financial freedom? If I have a financial freedom, I can just take a vacation anytime. I can go to India, or I can do whatever I want. So these are all made possible by investing in real estate and getting right mentor like Steve Davis. So Steve, once again I want to tell, Steve Davis, one of my initial mentor who kick-started, then afterwards I picked up. And so so that's why instead of the other investments, I picked the real estate, as I mentioned, to minimize the risk, to have a more control, and I had a good mentor and everything. So next I want to just briefly talk about what are all the things required to be successful in real estate. So first, it's all about the mindset and then having the right mentor. First, it's you, it's all about you. Are you willing to work hard? Are you willing to spend some time? And are you really want to, do you really want to make some passive incomes? Those are all the set your goals, set your mindset, and then you have a right mentor who can answer and help you out throughout the process. And as I mentioned, Steve is one of my initial mentor, and he has a great plan to educate his real estate investors. And I suggest you all to use join with Steve Davis and get a help from him, so that you can be successful in real estate. That's what I did. That's what I want to suggest other real estate investors to do that. And I also want to mention few other items. And you should not have any fear of failure, and you do your analysis before you starting your business or before you do anything. And remember one word, this is what it made me possible to have this financial freedom. And arise, awake, stop not until the goal is reached. Never quit. You try. You have your mindset, you have your mentor, and mentor is going to help you on setting up the system for you, and you don't need to quit. We have everything there, just use it and achieve your goal. Invest in real estate, enjoy your financial freedom, and invest in education, and don't afraid of any rejections while you are in this business. Many people just afraid of the failures or afraid of the rejections. Don't worry about it. If you have a right mentor, if you have a right team, you will be successful. Next, I started real estate like I said 12 years. First I started in single family, then I moved to multifamily. The first step is, I started as first step in multifamilies. I started in investing as a passive, then I did a JV, it's called the joint venture, and then I moved to the ladder of deal sponsor, syndicator. So I would like to show one of the deal, which I just sold just before the COVID. In end of February, we sold and closed successfully, and I want to go through that deal. So the property apartment name called Villa Encanto Apartments, and it's a C plus asset, and I bought this property in 2017, mid 2017. The total period is 2 years. The total holding period for this to complete the full cycle is 2 years 8 months. And when I do the initial analysis, my projection was 20% return for my investors. That was my projection, but actual is 24% plus, it is almost 25% of returns per year. And did I give any cash flow during this 2 years, 8-month period? No, because it is a value play. Steve will be teaching more about value play, yield to play, all those things, but this deal is a real value play, value added deal. And so there was no cash flow. We kept the cash flow and then returned everything after selling the asset. Okay, this is the deal and this is a holding period. What's the business plan? How did I made that possible, right? What is the purchase price, how much I sold, what I did. Okay, let's look at the business plan. The purchase price was $3.4 million and the rehab cost is about $330,000. And what are all the rehab items we did? We replaced roof, interior work, exterior painting, woodwork, and we completely changed the the curb appeal, the landscape around the property, so that when the tenant comes in, they will feel comfortable. When someone drives through the road, they will come look at the nice signs, nice landscape, and good curb appeal. They come and see it, then they come inside, lease the property. And we had we added the security gates, and also finally we replaced the HVAC boilers. And so the final sales price was $5.35 million, and as I mentioned, the exit strategy is 2 to 3 years, and exactly I did within that 2 to 3 year period. So this, why do we need this? There are some out of this rehab, some related to we spend for the property, safety and security of the tenant, and some money we spent for the curb appeal, some money we spent for the interior feel for the tenant, interior upgrades. And that helped me to increase the income and achieve my NOI, so that we can, the property worth more than property is more than the property is worth more value. So and the financial plan in this, I will briefly describe it. We upgraded the units and utility cost to play. So when I took over, one of the things I want to share, this is very critical, this is going to help you. So when I took over, the utility cost, electric, water, everything, it was about $12,000. That's a huge. For a smaller units like this was about a 72 unit apartment complex, and that is too high. So we found the issues, we fixed it, and we brought down the total utility cost to about 6.5 to 7, around $6,500 we brought it. That's a huge savings there in the expenses part of it. And so that helped me to increase my NOI, and that decreased my expenses. And another one important strategy we introduced was the in-house property management, which we will talk, which my partner is going to talk about it. And we were able to maintain the very high occupancy because of the curb appeal, because of we take care of the tenant satisfaction and everything. So when I took over in 2017, the property monthly income was $46,000, and when I sold it, it was 62 plus 62, 63. We are making even more than that certain months, the average about 63. And these are all made possible by all this above mentioned business plan. And it was a great it was a great experience, and I am happy as a deal sponsor, and my investors are very happy about the returns a return of about 20 or 25%, while the bank gives only 0.1 or 0.2% or maximum of 1% for the savings. So great investments, passive investments for my investors, and everybody is very happy about it. And one of my investor, Karthik, has given a great reference, great testimonial for that, and he shared his experience. So, so next, very important in this process, we faced, of course, so far you all listened about the positive, but it's a business, right? Again, so there will be a challenges, and you have to ready to face those real-time challenges. How to handle the challenges, what kind of corrective actions we have to take so that you can execute your business plan faster, right? That's a critical. We have to execute our business plan faster so that we will get best returns and we can exit the property. And so while I started, it was managed, the property was managed by a third party and other property management company, and that one of the challenges are slow turnarounds, turnaround time, and the less occupancies and collections. At this time, I would like to invite Daniel Twitter. He is one of my partner in multifamily property management company, and we both work together in this deal to make this possible. And he helped me, and when we, as I mentioned, when we make all this, when we face all these challenges, and when we meet a lot of issues, we come up with different strategies to be successful. And I would like to invite Daniel to talk about a few things about the property management and challenges and how we started and where we are like that. Daniel?
Thanks, Thanga. I appreciate the introduction. We met in 2018, and my initial goal was, how could I add value to somebody that has more experience than me, a better track record than me, that has been doing this longer. So I started looking for ways to add value, and one of the ways was Villa Encanto. So this deal in Northwest Dallas, it's a tough submarket. It's not, this isn't Plano. This isn't this is not Katy, Texas, right? This is a tough submarket. So, a little bit higher crime, the leasing portion of it is a little more difficult and things like that. So I came in and wanted to know, what could I do to add value to somebody like Thanga, who has this experience, this background, in order to make him successful? What could I do? So some of the challenges that we faced at the property, the property manager was there. She had 30 years of experience. She was very, very, very strong as a property manager. She had all the information. What we went through before is third-party management. And third-party management, you may be knowing this if you've ever had a single-family home and you ask somebody who was referred and they're managing your single-family home or maybe a small, multifamily property, you have third-party doing it. There are issues, there are problems that need to be solved. And if they're not solved in a timely manner, you're going to have problems. So nobody's going to look after your property like you are. And we quickly realized that. I think we went through, maybe 2 management companies very quickly and realized, expenses were very high, leasing wasn't very good, and it just requires property management. It doesn't stop, right? It's not like a one and done type thing. You don't just come in one day, and check the property over and say, okay, everything looks good, I'm leaving, and hopefully the checks start showing up. It's a daily thing. It's every day. It's very tedious. And so we quickly realized that was the difference that we wanted to make. That was the difference that we wanted to grow. And so we immediately had, a similar vision of, and that's very important when you're picking your partner, having a similar vision. So we had a similar vision. We both wanted to do property management and create a difference in that specifically. Some of the groups you go to, or people, they want to buy big properties. They want to buy 100 units. They think that'd be like really great. They just want to buy 100 units, and then they want to put their feet up. It's not possible. That's not how it works, right? You can't just buy 100 units and put your feet up. You have asset management, or they want to go to the beach and just let the property manager run with it. And in 2012, 13, 14, 15, 16, 17, 18, 19, 20, that might have worked, really, because the market just supported it. It continued to go up. We're at a place, 2020, coronavirus changed everything. It was already coming. There was already some things happening, but 2020, really, coronavirus changed everything. You can't just sit back and relax and hope that things go well, or hope that the cap rate compresses and people just want to buy it more. You have to be proactive, and you have to take, control of the business, and that's why we started the property management company. Some of the challenges we faced through the winter months is, a little bit low occupancy. Like I said, we had a property manager that was in the business for 30 years, had tons of experience, and all it required is, going in and, asking her if she needed any help. Really, just going in and asking her, hey, is there anything I can do to help you? We need to get this property leased up. We have to have 4 or 5, 6 leases this month, or, this week we need to have 2 or 3. Like, what kind of marketing effort can we do? Just asking. She knew all the answers. I didn't give her any of the strategies, really. I just asked her, hey, what should we be doing? And then she was like, oh, well, we need to be doing this and this and this. And I was like, oh, okay, well, let's do that. And next thing you know, I think January, February, March, we started to immediately increase occupancy. December, we started coming back, and increasing occupancy. I think for the entire year of 2019, so I came in with Thanga like October 2018 we met. The entire year of 2019, we had record occupancy. Every month was increasing the revenue. I think it was like, 56,000 and 57,000, 58,000. I think we sold, it was 63,000, in March of 2020. So throughout this whole process, and it wasn't like a, one time, come in, get the job done. It was every day, every couple of days. Hey, how's it going? Where are we at? What units need to be done? Where's the work order? What's happening? I think we went through, this is another challenge and struggle. You don't necessarily know, but we went through 3 maintenance technicians in a short time. It's a rough area. It's tough to keep, good people, working and find them, vet them. You have to have referrals. That's why, as you grow as a company, you get more units and things. You have more opportunities to bring in, better resources and better property managers and better technicians. So we got a technician in 2019. He came in, did a great job. All of a sudden, like, I was getting much less phone calls for, AC condensers and, this problem, plumbing, electrical. We started to really focus on, seeing what was coming, the policies, procedures, and streamlining things, right? Making sure that we had, every time that a new problem comes up, you have to think about how you want to solve that problem, not just this one time, but going forward. You can't solve the same problem a different way every single time, right? You might refine it just a little bit the next time, but you want to be able to, streamline the process so that it becomes more efficient. Your time is very valuable. And so, we started automating a lot of the processes. And, towards the end, really the last 3 or 4 months, we were spending less time at the property. Everything was getting even better. Our expectations were there. So everything started to come around. And finally, we'll talk about this more, I think, or, Thanga talked about it. But just the sales portion, Thanga's a humble guy. Saying your projection is 20% and achieving 24% in 2.5 years on a value-add property is unimaginable. It's very hard. So, you have to realize, like, some people, he's not saying it very expressively, but really, like, that, that return for an investment like that is very difficult to do. And I have to share, it makes me laugh, but we had an investor at the end of the property ask, hey, 24%, I thought it was going to be higher. We were like, we said 20, you got 24, and they asked for, all the financials they wanted to see. What happened? How did the property go? So we already had the information, right? We audited it, we gave them the P&L, we gave them all the financial information, explaining how we got there and the sale of the property and stuff like that. To take the value of a property, in 2.5 years from, a little over $3 million to $5.4 million, increasing the value $2 million in 2.5 years. That's a lot. That's a really strong deal. So I guess I just want to end with, that realizing, how good of a job that was, and that's the fifth deal that Thanga did, right? So then the sixth deal that we sponsored, that he brought me in, we realized, hey, we have a similar vision, we have a similar goal. We got into was Crossings at Irving. That was a 160-unit property in Irving, Texas, and so. Very similarly, different than a value add. It's more of a hybrid deal. Some small value add, but in a good location and stuff like that. But so those were some of the challenges that we faced. That was some of the challenges that we faced taking over property management from a third party to make the deal successful. One thing that I've had a lot of mentors, and even Thanga is kind of one of them, really. In his background, 12 years of experience in real estate, it's a lot, and he's learned from, guys like Steve Davis, like some of the best, right? So he's taking all that information, and we're working together and transferring it so that we can be successful as a team, and that's kind of what we've been doing.
Okay, so now what we're going to do is meet a passive investor of Thanga's. His name is Kartik. He's in the Dallas-Fort Worth area, so that you can get a feel for the experience that a passive investor has when they invest with Thanga. Thanga.
Thank you, Steve. I would like to introduce Kartik, one of my passive investors. And I know Kartik for last 5 years, and we both started as a passive investors, JVs, and then I moved to deal sponsor. And Kartik, can you please go ahead and share a few words about how you started real estate and what made you successful in real estate, and just share some of the deal information. Thank you.
All right. Absolutely, Thanga. Thank you. I'm quite excited to be part of this. And just to correct you, I know you for 7 years, actually. We started off 7 years ago. As an introduction, yes, I am a passive investor and have been so for almost 7 years now. And I'm extremely happy with the decision that I took 7 years ago. And to share a little bit of my journey, I've been in the US for almost 20 years. And I work in a Fortune 500 company in the DFW area. Quite successful, I would say, in a management position. And I started working around 1998, and I was very focused on my career, as one would expect to do. And spent like 10 years working in the company, focusing on the career of the corporate America. And always have been focused on savings. We bought the typical American dream of buying the home. At that point in time, I actually even paid off the home, for example. And then around 2013 or so, most of my investments were in stocks. And at that point in time, I love my job. I love what I'm doing. But in terms of having a passive income stream, I was spending a lot of time trying to think about how I want to invest my money wisely so that I can have a second stream of income beyond what I actually do in my job. And as I mentioned, I really like my job. And the question is, if I was not able to go, be in the job, what the situation would be. And here, I wanted a little bit of security for my family. And at that point of time, I tried multiple different things. I looked into stocks, I looked into options. Of course, I looked into MLM schemes as well. But at the end of the day, what I was really looking for was a pure passive income, because in my job, I travel a lot and I hardly have any time even to just spend time with my family. So I was looking for a purely passive stream of income. And then the second thing based on my corporate world is also I was looking for the least risk possible, right? Of course, there is no investment, there is no risk. So look for the least risk possible and also the best ROI. As in my business side of things, I look for the best ROI in the least investment, least risk possible. And the last one is also a little bit critical, which is the best control of the return on investment. The same principles that I apply in my job as to best control of return of investment. And that's where I got exposed in one of the seminars to the real estate investment in general, and also the single family and multifamily. And in those seminars, I also got fortunate to get introduced to Thanga actually 7 years ago. So it has been an exciting journey in the last 7 years. And I would say, first of all, I started really slow with single family. And initially it was honestly saying, you know, being a person who was always investing in stocks to investing a big amount in real estate, that was a big step. It was scary, but of course I went through the hump and invested quite a bit in single family homes. But at the end of the day, when I learned more about multifamily in the journey, I felt multifamily has a lot more control on the return, relatively speaking, compared to a single family. And that's when Thanga and myself, I trust Thanga because he puts his investors' money in front of his own investments. So in that sense, we built a mutual trust. And I started off my first multifamily investment in a property called La Vista. And at that point in time, the projected return was 20%. And I thought, you know, I was very skeptical getting in. But at the end of the day, it turned out to be a 35% return. So I was extremely happy with that investment. And then we moved into another investment together, of course, with other partners as well, called Villa Encanto. And I believe Thanga is going to be talking about in more detail about that deal. Again, similar projections. He had a conservative projection of 20% on there. And we ended up around 25%. So extremely happy with that investment as well. And we continue to do so with additional investments. Recently, we are in another deal called Crossings. So to summarize, it has been a great experience. And exactly in particular with multifamily, I feel the deal sponsor is the critical piece. And as I mentioned, I'm fortunate to have Thanga being a close partner with me as a deal sponsor. Because his experience as an asset manager as well as a property manager, he understands the whole process. And because of that, he's able to optimize the knobs. Because ultimately, from multifamily, in my perspective, the P&L, the net operating income that actually determines the value of the property, there are several knobs. And based on the experience, he has been able to dial the knobs right, you know, increase the top line and optimize the expenditures so we can really get the bottom line up, which is the net operating income, thereby increasing the value of the property. And that has really resulted in the 30 to 35% type of returns that I've been extremely happy about. And I look forward to continuing to work together. And I was there in one of the seminars, and I really still remember the time that I made the decision to jump in. And it has been a very wise decision on my side. And here I have a very good balance of the job, which I love, and also a passive income that keeps coming over time. So thank you, Thanga, for the opportunity, and I'll give it back to you.
Thank you, Karthik.
Yeah, that's a great story. And it's nice to talk to somebody who actually enjoys their job. So he's got dual streams of income, something he's passionate about, and income from his money. So that's the two streams of income that we talk about on the radio show all the time. So are you in 2 total apartments or more?
Over I've been around 10 of them over time, but
wow.
The 3 of them that I'm talking about are the primary ones. So right now I believe I'm in around six. Actually, I lose track because
you don't have to think about it. You know, you get your check every quarter.
You put the money and collect the money back.
Yeah, pretty much Karthik, we both started as a passive, and almost Karthik is there in all the deals. So kind of we both are sailing together in the investment.
Very interesting.
Yeah.
All right, Karthik. Well, thank you very much. We really appreciate it.
All right. Thank you.
Yeah.
Take care.
So thank you all. Thank you, Steve. Thank you, Daniel, for coming here and explaining all the details. I would like to give the quick summary so that, you know, by the end of this video watching, right, you will gain something. How did I get there? You know, from, 12 years back to financial freedom in less than, 10 years really. So first, I suggest you start by investing for education. Have a good mentor. That is the main. Second, you start as a passive with a minimum amount. If you want to save some money, you save it, put it in bank, and take a minimal risk investing as a passive, and then you see how you like it, and if you like it, you go and do JV, and then you can do the deal sponsor. You can grow in that way. So my suggestion as a summary is definitely to sign up or have a mentor, people like Steve Davis, who's in this field for a very long time. I am from India. I have no idea about US real estate business. All this made possible people like Steve Davis. Without good mentor, I won't be here, and I cannot enjoy my financial freedom. And I would like to thanks people like Steve Davis and many other people who helped me to achieve this financial freedom. Thank you.
Thank you, Tony. That was awesome.
Yeah.
All right. Thank you, everybody, for watching. And we'll be back soon with another Deal Spotlight video for you.